In this week's episode of the Stockscores Market Minutes, we're going to talk about whether there is a stock market crash coming. I will also do my analysis of the overall markets. We'll look at stocks, currencies, crypto, some commodities charts. I will show you the process for how I identify day trades and how we use some algorithms to find them. And then we'll run a little Stockscores market scan that can also help you find day trades. That's all coming up. All right, so is the stock market going to crash soon? We've seen a little bit of volatility lately. We've had a couple spikes lower because of inflation concerns, comments from the US Federal Reserve. And then, of course, we've had that COVID variant, the Delta variant, which has caused some short-term volatility. But each time, we have managed to see the market bounce back from these pullbacks. But we should keep in mind that with the fall approaching, we often get weakness in September and October. And given how far the market has risen, perhaps there is a market correction coming. Now, crashes come in pretty predictable ways. They don't happen overnight. They happen in stages, and they tend to come when the upward trend line is broken. And often, there is first a falling top on the chart. I'll show you this in just a moment. Now, as of right now, there are no signs of a crash, at least on the longer term charts. But let's take a look at the charts that I like to analyze on a regular basis. So this is the weekly chart of the S&P 500. And you can see that there was a break of the upward trend line there, and we sold off. And there was a break of the upward trend line there, and we sold off. We had a little fake out right here when we broke this upward trend line. That didn't materialize. And then since that time, we've been in a pretty good linear upward trend line. Now, this past week, we flirted with that upward trend line, but came right back to close above the trend line and really at all-time highs by the end of the week. So the weekly chart says no crash. And when we look at the daily chart, we can do that same analysis. There was a trend line there, and so there was a short-term sell signal there that led to a couple of weeks of weakness. But since then, no upward trend lines have been harmed in the making of this video. You can see that each time there's a little bit of weakness, we don't really break down through that long-term upward trend line on the daily chart. The only place where we've seen trend line breaks has been on the intraday chart. And so for the swing trader or day trader, we've had, 3 or 4 days of weakness when that trend line was broken. And here we had really just one day. The market came right back. But then we ultimately broke a trend line there and had the weakness that we started this past week with. But again, we've managed to come roaring back and maintain a healthy chart. So, will there be a correction? Yes. Eventually there will be. There always is. Is there one looming in the near term? No, because no trend lines are being threatened. And therefore, despite what you may think about whether valuations are justified, the reality is the sellers just aren't that motivated. All right, let's get into the normal market analysis. This is the S&P 500, which we just looked at. And we've had quite a bit of volatility the past couple of weeks as there has been some uncertainty around inflation and the Delta variant of COVID. But the market doesn't seem to care beyond the short term because we have managed to come right back. There you see that long-term weekly chart. When we look at the NASDAQ, we can see a trend line. Maybe in a short-term sense, we had a little minor breakdown. The longer-term trend line remained intact. Still a healthy market on the NASDAQ stocks. Now, in the small cap sector, we don't have a trend. We have been going sideways for 4 or 5 months. And that is meant for the retail trader, those who tend to favor those lower price stocks. It's been a bit more of a grind. Now, there are hot stocks every day. I will show you how I find them at the end of this video when we do our day trade review and market scan. But it hasn't been the same hot market that we had at the end of 2020 and into mid-February. Since mid-February, it has been a grinder's market where you have to pick, 2 or 3 hot stocks that show themselves each day and favor trading those. And again, I'll show you how to do that in just a few minutes. Canadian markets, upward trend is intact, a little bit sideways the past 7 or 8 weeks perhaps. No sign of a breakdown, but it is a little bit quiet because we have seen some profit taking in oil, which has a major component in the Canadian market. On the TSX Venture, where we see those micro-cap stocks, the penny stocks, that market has fallen out of favor since mid-February when that retail exuberance kind of got a little too extended. You can tell when a market gets extended because it runs away from its trend line. See how that runs away like that? That's usually the end of the upward trend. And then you break the upward trend and often go sideways or often even lower. And right now the sellers are sort of in control. And I think there's actually a good chance that we see this market go even lower still in the near term. Currencies, US dollar has been making a decent comeback the last 6-7 weeks, looking better. Still has, in a long-term sense, work to do, but it is better. Cryptocurrencies, Bitcoin is not great. Had a little bit of strength the past 3 days this past week, but it has a lot to do to overcome the falling tops that have been on this chart since really February, when that exuberant retail trader market went parabolic and broke the parabolic trend and then broke the linear trend right here. And that has led to the downward move. So I would say it is still best to avoid Bitcoin until it can break its downward trend line. On Ethereum, also in the downward trend, falling tops, best avoided. On commodities, there's gold. It also went parabolic. There's your linear trend line. You ran away. That's the emotional trader chasing that thing higher. And then the bubble bursts, and then the upward trend line breaks. And now we've actually been hanging in reasonably well. But with the falling tops here, I think it's best to avoid gold until we can break that downward trend line. That's resistance. If we could break that from a rising bottom, which is formed, then gold might be a little better. But for now, I would say avoid it. Oil, in an upward trend, flirted with breaking the upward trend in the last week. You can see during the week, last week, we went below, but we managed to close above it. So it's still okay. Long-term resistance, not really till up here. So it has a little more room to go, but not a lot of upside. And so you have to question whether the reward potential is worth the risk. Because where's support? Way down here. So if you're here buying, your upside is that, and your downside is that. And that's the main issue. No reason to sell it, but to be buying here, I think is risky. Fear? Fear had a little bump, and then it's fallen back down again. So no real fear in the market. So on the U.S. stock market, I'm bullish on both time frames. Canadian bullish long-term, neutral short-term. Gold neutral on both time frames. And oil bullish long-term and neutral short-term. Stocks have bounced back from their recent pullback and really resumed their short-term upward trend. They only broke down a little bit on those short-term charts. The long-term charts stayed healthy. And so they're holding those long-term upward trends. That's good. Oil has also held its long-term upward trend, but still getting a little bit extended. Got to wonder how much more it can go. Gold is stable and fear is low. All right. So normally I do the day trade of the week, and we will look at one. But what I want to show you this week is how I find my day trades. This is TradeStation, program that I've used for probably about 20 years. Great program. And what I've done is written my own algorithms in TradeStation, and I watch this screen throughout the day for something called action candles. An action candle is one on a 2-minute interval that has abnormal volume and abnormal price action. And when we look at a chart, we can look at XBIO, which triggered an action candle at 9:32 on Friday. You can see there's a little pink dot there. That is my action candle indicator. I share that with my active trader students. You can learn more about that at stockscores.com. But what's important is that stock was surprising the market with strength. Nobody cared about it leading into Friday. Friday morning it came alive because there was some rumor, some thing that excited investors. And so the action candle is our trigger point. It tells us that something is going on. And what you can see on this window here is all of the stocks that trigger action candles through the day, as well as the time that they triggered them, and what the maximum reward for risk was. So on XBIO, it made as much as 27.5 times its risk. That means the height of this candle went up 27.5 times. The distance up to the highs was 27.5 times the height of that candle. That's a great trading candidate. Now we're seeing this a lot lately, stocks that make big runs in the morning and then fall apart later. There's your linear trend line, broken right here at around 14, 15 times risk. By the end of the day, after that breakdown, it had almost given back all of those gains. And this is the kind of market it is right now. You have to do what I call a Steve Miller trade. Steve Miller sang that song, "Go on, take the money and run." And that's what we're doing on these hot stocks, taking profits when those trend lines are broken, or even when the parabolic trend is broken. Take 15 times risk. And so if we look at the economics of XBIO, and it's not assuming we get out at the high, but let's just cut it in half. For $100 of risk, 1,110 shares. You want to take $1,000 of risk, you buy 11,100 shares. Either way, the percentage gains are great. For $100 of risk, it took $2,520 of capital. And with a reasonable exit signal, not even trying to get most of the gain, but maybe just half of the gain, 13 times risk, that's a $1,300 gain on a $2,500 trade, 51.5% return on a hold that was just a few hours. So we can use TradeStation to find these. And if you're my student, I'll show you how to do that. We can also run a Stockscores market scan to find the stocks that are trading abnormally. Now, Stockscores is not real time. It's intended for the position trader, the longer term trader. But we can still build a list about an hour after the market opens of stocks to keep an eye on through the day because they are trading abnormally. That is the key signal that we're looking for, is those stocks that are trading abnormally. And so I set up the day trader scan to try to find those stocks that were trading with abnormal price, abnormal volume. And these are the stocks that made good gains through the day. If I look at Roku, for example, you can see that it had a big run through the day, and it did so on abnormal volume. And so even if you don't catch it down here, there's opportunities to trade the breakout from an ascending triangle right there, the flag pattern break right there. These are all things that I can teach you to look for in the different courses that we offer at Stockscores. You want to learn more about those, just go into the trader training menu, learn how to trade. There's some videos there. You can check that out. All right, well, I'm away from my normal office, which is why you don't have to look at my face this week, just my voice. Hope you've enjoyed this week's video. If so, please click on that like button, subscribe to the channel, and most importantly, trade well. Thanks, everyone.